All right, so here's my first video breaking down the fundamentals of trading. The first thing that you're going to need to know when it comes to trading is market structure. The second thing that you're going to need to know is price action. And lastly, you'll need to know risk management. If you have heard otherwise and people make you feel like there's 7 steps to trading, there isn't. These are the only 3 things you need to know. So for today, we are going to be going over market structure. That is all that we are looking at today. I'm trying to expand this, but it's not letting me. For whatever. So we're going to be looking at market structure. What is market structure? Market structure tells you basically the trend of the market. Are we going, is price going up or is price going down? And if you're on a higher time frame, you should be able to see that clearly. So for me personally, the higher time frames that I trust is the 1 day, the daily. Daily tells you the overall trend of the market in itself, which is somewhat important. But if you are a swing trader, you don't really want to trade on the daily. You'll want to be looking at either the 4 hour or, as you can see here, price is on the downtrend, or you'll be wanting to look at the 1 hour. And as you can see here, price is also on the downtrend as it was for the day. So from here, how do we mark out our structure? How do we mark out our structure? We want to be able to see, and the thing is, price doesn't always look like this. It does not always look like this, but when it do, it's great. You'll know. You'll know when there's a clear uptrend. You'll know when there's a clear downtrend. This is a clear downtrend. So when price is in a clear downtrend, what does it do? It makes lower lows, it makes lower highs, and make a lower low, and then it makes a lower high, and then it makes a lower low, and then it makes a lower high, and so on, and so forth, and so on, and so forth, and so on, and so forth, and so on. We see that this is what you call a downtrend. This is a downtrend. Lower high when price is in a downtrend, it needs to respect its rules and it needs to respect its resources. We know that after price hits a certain level, institutions, the banks that are in control of the market, they don't want to go to a place that's already been claimed when it's moving, when it's trending. So when price when price hit this low, why did it pull back? Why is this pullback necessary? It's because the market needs money to move. For the market to move downward, it still needs to move up to collect money in order for it to drop safely. So for this market to move down, and it said, you know what? All right, I want to continue this move down. We're going to have to pull back, collect a couple of stop losses along the way. That's what we're going to do. And then what's going to happen? We're going to continue back down. But you know what? We want to go a little bit lower. So what are we going to do? We're going to pull back. We're going to collect some money. We're going to hit these stop losses. And then what we're going to do? We're going to keep going lower. You know what? We want to go lower. So what are we going to do? We're going to pull back. We're going to get some stop losses. And then we're going to go. That is exactly how the market moves on the downtrend. And guess what? Oh, crazy. Perfect example. It does the same thing on the uptrend. What happens? It goes up, small pullback, up, small pullback. Uh-oh. Boom. Lower high. Higher, higher low, higher high, higher low, higher high. This is how the market moves on a, uh-oh. It's difficult to do this on a tablet. On a uptrend. This is how the market moves on a uptrend. It makes higher lows, Higher highs, higher lows, higher highs, higher lows. What are the institutions thinking? Okay, we want to drive price up, but we're gonna have to wait. We're gonna have to get some stop losses, and then we're gonna move up. But then you know what? We want to go higher. We're gonna collect a couple of stop losses, and then we're gonna move up. Collect a couple of stop losses, and then we're gonna move up until what happens? Price breaks its structure. Now, the market moves in three ways. The market moves in three ways. We talked about one. One, it don't move that way. One being a uptrend. Two being a downtrend. And three is what? Consolidation. When price is consolidating, that's when we do not want to trade. And that's why I like using the EMAs, because the EMAs really help you figure out when price is consolidating. When you are not making higher highs or lower lows or anything, you are in a consolidation. This is a consolidation. You do not trade here. You do not trade during consolidations. You trade these moves. You trade these moves. You don't trade during this. And how do you know? Well, you know when you see that price isn't doing what it should do. When price isn't respecting itself, it's not moving. It's within the, you're caught in a consolidation. And that's when you want to take a break, or you know what, move to another pair. But you only want to trade when price is active, when price is actively moving in a specific direction. So we talked about market structure, we talked about downtrend, we talked about uptrend, we even figured out consolidations. Now, what are the rules that price needs to respect? When you are in an uptrend, and the same goes for a downtrend, when price makes its high and then it's low, and then it's high and then it's low, price cannot break its previous low. So this price, no matter how far, it should not pull back towards here. At this point, the trend has changed and you are no longer in an uptrend. Price should respect its lows in an uptrend. And in a downtrend, price needs to respect its highs. So when price makes this low and it goes up and it makes this low, price can pull all the way back. It can even come and make equal highs. But what you don't want it to do, is cross this line. Why? Because this is the high that price made. This is the high that it needs to respect. So it can pull all the way back here. And then what would it need to do? It would need to reverse. If it continues, we are no longer on a downtrend. Now we are on a uptrend. So when price is making its moves in a downtrend, it needs to move down, it needs to move up. Excuse these, this is my community. I'm gonna put the link for that in the bio as well. But it needs to move down, it needs to move up, and then it needs to move down, and then it needs to move up, and then it needs to move down, but it cannot break these highs. It can even come back up to this high, but all it cannot do is just break it. At that point, the trend is over with. And at that point, you really need to wait. So what happens if you are in a downtrend and price breaks its structure? What happens when you're in a downtrend and price breaks its structure? What will we do? We would mark where that high is, and these levels are not absolute. They kind of float. So I would say this is the level to where we didn't want price to go past. So price shoots past this level. What we would want to do is we will want to see the high that price makes here. Now, we do know that here, if price breaks above this level, This is where price can go to. Why? Because this is where it went to before. So we could assume that price would come here, or we can wait, see where price wants to go to. It may not even go all the way up into this level. But if it comes up and it stops here, then we want to see price come back down. And then this is where we would take our trade. Why? Because since we broke the downtrend, we are no longer in the downtrend. And now we are in the uptrend. We know that price is going to now respect this level. So now we want to take a trade, and we want to have our take profit 1 here. I'm gonna mark it, boom, take profit 1 here, and take profit 2 here. So our trade would look something like this. We would probably enter in right here. We have our stop loss beneath here, because we know that if price breaks back beneath this line, we are probably entering some sort of weird consolidation, or the trend is changing again and we want to get out before it just dumps and go completely to hell. We don't want that to happen. So what would we do? We would enter our trade here, put our stop loss to where price shouldn't go again. Put our stop loss to where price should not go again. Put our take profit to where price has been and where we believe it is going to go again. So this is a good 1 to 3, as we can see here. Our risk reward would be 1 to 3. If we had our take profit here, we would still be at a safe 1 to 2. So if you were risking $100 here, you're trying to make $200 here, and then ultimately you're trying to make $300 here. This is basically this is honestly a bit of market structure and price action. In all honesty, I just gave you a tad bit of market structure, price action, and dang near risk management. I just really went into all three. But in understanding these things, this really tells you where you need to go. And you really need to keep it simple. Keep it simple. What is price doing? Is price going down or is it going up? Okay, I see here that price is going down. What are the levels that price needs to respect? Okay, so price came down here. It came up here. It came down here. It came up here. It came down here. It came up here. So it's still respecting. It still made a lower low. It still made a lower high. And now we're making a lower low. So where can price come back to? What level can price come back to? Price can come back all the way to here. This is the equal high that price can come back to. This is where, I'm not going to say we expect price to go to, but this is where we want to watch for. But let's just say it don't and this stops here. Once we start seeing price action show us that we want to go lower, that's when we'll want to enter our trade. Now, how do you just know that? Is it just one specific candle? That's when we get into price action. This really has, I went a little bit into price action, but this is really just market structure. Is price making lower highs, lower lows, or is price making higher highs? Boom, higher high, lower low, higher low, higher high, higher low, higher high. What is price doing? Is price in the uptrend? Yes. What areas do we want to see price not break through? We want to see price this low on a high is the area to where price should not break through. Actually, let me use the square because like I said before, these zones are not absolute. This is where price should not break through. And what happened? Price broke through and we went into a short downtrend. Now, if you wanted to take this trade down, how would you have known? Now we can get into price action. But this has been a good crash course into what? Market structure. Just watch this video as many times as you need. If there's anything that you don't understand about market structure, if I did not explain it right, just, of course, you can DM me, you can ask me questions, you can leave them in the comments below. But this is how you understand market structure. This is how you can find an uptrend. This is how you can find a downtrend. And this is how you can spot consolidations. How I spot consolidations, once again, is with my EMAs. I use the 20 EMA and I use the 100 EMA. The 100 EMA helps me figure out the overall trend of the market, regardless of what time frame I'm on. And the 20 EMA really hooks price, and it lets me know the range of price. So I know that when these EMAs get really, really close to each other and we start seeing price like this, okay, we are in a chop. This is a no trade zone. This is a no trade zone. Do not trade during a consolidation. Don't think, oh, you know what? I'm going to trade in here. I'm just going to scalp it. I'm going to catch this move here, and I'm going to catch this move here, and then I'm going to catch this move here, and then I'm going to catch this move here, and then I'm going to catch this move here. No. As you can see, there is no structure in this. Look at this. What do we say price do in an uptrend? And what do we say it do in a downtrend? It should do in a downtrend. There's no structure in this. What is the structure in this? What is price doing? I have absolutely no idea. This is a consolidation. The consolidation is doing nothing but gathering money to make the move that it needs to move, that it needs to do afterwards. That's exactly what this consolidation did. It took out all of these stop loss from all of these traders who were placing buys, who were placing sales, and then what did price do? It went on to do what it wanted to do. It went on to make a downtrend. It made a lower low, made a lower high, and then it made a lower low, and then it made a lower high, and then it made a lower low, and then it came up with this equal high, and then it bounced back down. Boom. And now we have another consolidation. We have another wide range consolidation. And then what happened? Price went into an uptrend. So this is a crash course. And I really, really hope that I explained this right. I'm getting better at learning how to explain things. Teaching has not always been the best strong suit. So, like I said before, if there's anything that you don't understand about the way I explained this, comment, DM, let me know. I'll break it down. I'll go into more detail. Next up is price action.